Stock futures are edging up Tuesday evening as investors look toward the Fed's final policy decision of 2021, and inflation is on everyone's mind. Many market participants expect the Fed to speed withdrawal of the crisis-era stimulus program. And why? Well, last week's Consumer Price Index showed the fastest surge in U.S. consumer prices since 1982. And today, the U.S. Producer Price Index jumped by the most on record, showing a 9.6% year-over-year increase. And that's with phony formulas. If truth be known, the rate of increase is likely much, much higher. Thus, anticipation is the Fed will ramp up the rate of tapering. In fact, last month, the Fed began dialing back these purchases by $15 billion and announced another $15 billion reduction for December. So it should be no surprise for the markets that the tapering will accelerate. The next big question is what will happen to interest rates. With the tapering through February of next year, the door is open for an interest rate hike in March. This is why growth stocks took the news of the PPI a bit harder today. An increase in the interest rate means the growth multiple should shrink. But let's not get too far ahead, as there's lots of ground to cover between now and March. So let's take a look at the charts. Today we're going to take a quick look at one chart only. It's the 6-month daily chart on the Fidelity Nasdaq Composite Index ETF, and the symbol is ONEQ, and this serves as a proxy for the Nasdaq. And since the Nasdaq took the news today the hardest, that's why we're looking at this chart. Now, as you can see simply by the price chart, and what I've talked about before is that this particular formation we're moving through right now, there on up and down, is actually somewhat similar to this chart here. Now, this chart here in September to the October time frame came a bit lower down here in early October than I'm expecting here now, but we'll have to wait and see, because the last couple of days were pretty strong on the downside. So I'm looking for a bottom somewhere around here, equidistant to the recent low there in early December, but it's possible to go a little bit further down, but I don't think that's a problem. In fact, I think this particular pullback is healthy, and I told you that, say, a week or two ago. Now, moving here into volume. Volume picked up today, but nothing out of the ordinary. Here into the MAC, you can kind of see again the similarity of the formation. We had the top here in early September. It came on down here. We had an attempt to move up and through. It failed and came on down here, where finally there was enough basing and bottoming and strength for the market to take a run. So at this point here, we came on down to this point. We had an attempt, a fail, and now it's getting reflected on down. We're not sure where it's going to end. A little bit of acceleration there with a fast line and the slow line here, but we're near the zero line, so there's still plenty of strength. But I think that we're going to have at least some sideways trading for a day or two, depending upon what happens with the Fed. Moving on down here into the histogram, you see pretty much the same thing here. We did go a bit deeper there than we did back here in, say, mid-September and then late September, early October. But I don't think really we're going to go all that way down here in the current move. It's possible, but I don't think that's what the probability is. Moving here into the price rate of change, nice bottoming and basing there September, October, and this actually we've got some volatility, but still I think the pattern looks to be reasonable. Bottoming and basing at that point. I don't think we'll go too much lower. It's possible, but I don't think that's the probability. Moving here into the RSI, we're under that 50 line. We're at a moderate 40.16. We're moving on down. We still have that bottom set here. Can we exceed it further if this line continues on down? Possible, but again, I don't think it's the probability. Back here in the September to October time frame, it was about equidistant on the downside, both of these moves, so that's kind of what I'm expecting. Look for that here real soon into later this week, certainly by early next week. And then the stochastics, somewhat similar of a move as well. From that top we came on down, we had the move, fast line came up through the slow line, but then back down it went again and bottom and base before it had enough strength to move up. So here we have the same thing, came on down here, we're having this move up and over the slow line, but looks like we're coming back through under that 50 or midline. So again, look for some bottoming and basing later this week into early next week. Now to the Williams, pretty much the same thing, and you can see the similarity in a lot of those oscillators between the current time frame and then back in September, October time frame. So just look for that in the oscillators and as well in the price chart itself. I think we'll come back down here, but I think again that is healthy, and that's going to set the stage for a stronger rebound coming most likely into next week. And for today, that's ChewDog Charts. Thank you.